Hey, this is Geoff Gannon, and you're listening to the Focus Compounding Podcast. This is the podcast where Andrew and I talk general investing concepts. To learn about specific stocks I like, go to focuscompoundinggazette.com. That's focuscompoundinggazette.com, and enter your email. Once you enter your email, you'll start getting one free 2,000-word stock write-up a week. Andrew and I also manage accounts for clients. To learn more about our managed accounts, email Andrew at info@focuscompounding.com or text or call Andrew at 469-207-5844. And now here's Andrew with your regularly scheduled podcast.
Welcome. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focus Compounding, sitting alongside Mr. Geoff Gannon. Jeff, how's it going today?
It's going very well, Andrew. How's it going with you?
It's going great. We hope it's going great for everybody else. If this is the first time you are listening to us, or maybe you're watching us on YouTube, be sure to hit that subscribe button, thumbs that video up, help spread the word. If you are following us along, be sure to follow my Twitter at Focus Compound. Check out all of our content. We write about stocks at focuscompounding.com. We give out free stocks at focuscompoundinggazette.com. And then we also manage capital as well. So go to Focus Compounding and click that Invest With Us page to learn a little bit more about what we're doing. So in today's video, we are going to be going over how to read the financial statements. I guess the big parts to really go through. Now,
yeah, we're doing the 10K.
Yeah, and we did an episode on how to read a cash flow statement, how to read a balance sheet, and those are incredibly popular videos. So I think a lot of people are just curious in general how to, just navigate the 10K.
Right.
And I think a lot of them, like, for example, when I spoke about this in the balance sheet, they all understand the accounting behind it, but they're more interested, a lot of individuals, in just how you interpret certain things from the accounting.
Okay.
So I think it'll be good to dedicate a video going over the 10K. So let's do that. So if you open up any 10K, and this is on SEC.gov, we do read, every single page in the 10K, and we obviously suggest people do that as well. But the first part's the business part.
Yes.
Right. And do you want to kind of explain what you typically look for? I mean, obviously, it's just really a summary of the company that you're looking at.
Sure, right.
But how you sort of start there.
Yeah. So the first thing actually that I read is the cover sheet for 10K for the SEC. We'll always have the company, what classes of stock it has, how many shares outstanding, what date this is prepared for, and is also going to give you the state of incorporation, and is also going to give you where their business is. So I just highlight those things. They're very quick. So you get the exact share count for that time, and you're also going to know if, is it incorporated in Delaware, Nevada, places like that. So, or a specific state that they probably do business in. The two states you're most likely to see that aren't the state that the company's from are Delaware and Nevada.
Yeah.
Delaware being the most common. And so I highlight that stuff and then go right to the business section, which is the first part. The important thing there is where they talk about competition. So one, they're going to describe their business model to you. So basically what they do, and that's going to vary a lot from companies that give very poor descriptions of their business, especially very big companies. They're going to say things like we do, I haven't looked at Microsoft's recently, but they may say something like, we provide all sorts of services that make businesses more productive using,
What does that mean?
Exactly. Instead of and it'll be deeper in that you'll see that they specifically discuss operating systems and servers and applications, and then things like that. So, but with some companies, it'll be pretty simple. And it'll just say with parks or something, we operate drive-through animal safaris, right?
Yep,
and then you highlight what that is, and you're like, what is a drive-through animal safari? And you kind of figure that out. But the one that's very important is competition. They're all going to discuss to some extent on what basis they compete. And they're also going to describe possibly who they compete with and how many competitors they have. Some companies will be explicit about that. I've seen companies that tell you exactly who some of their competitors are or describe them enough that you know who they are. So you could be reading a 10K of Procter & Gamble and they'll say Kimberly-Clark. They're probably not going to in most cases, but some small companies do. They'll just come right out and say that we compete with and list actual competitors. There's some language that's very common here, which they're always going to say highly competitive. If that's missing, then that's interesting. That's something that you should look for. Because if a company doesn't say that the industry they're in is highly competitive, then that's a hint that there's a real competitive advantage here. Because otherwise, the lawyers will put it in.
It should jump out.
Yeah. Like we were talking to someone about BWX Technologies, and he was saying that after hearing me talk about it, it was interesting to go and look at their description of their business because they kind of can't tell you that it is highly competitive or something because they're like the only one that the government's buying this from. So they kind of have to be upfront about, we compete on the basis of like technology, whatever, scale, things like that. And they explain what it is that their advantages are, right? So they're going to list the things like, say it's a retailer. They'll say we compete on the basis of price, selection, convenience possibly, or if it's like Nordstrom or something, they'll include customer service. Whereas if it's a supermarket, they may not include customer service. Often the order in which those words are presented is also a hint as to which one they think is most important and least important. If you ever read something where price is not listed, that's very important. Companies will almost always try to list price. We compete on the basis of price will be one of the top ones. And if they don't, then that's very, very interesting. Or if they say something
because they
like...
have like some sort of pricing power or something like that.
Right. Because all businesses are going to say that they compete on price, except to the extent that they can't sort of justify saying that they compete on price. For one thing, just like in terms of covering themselves and stuff, they like to make their business sound worse in many ways in terms of the risk sections and stuff than is realistic. And also just in terms of economics and stuff, people go to the default thought that price is what you compete on, right? And to some extent you do in all sorts of businesses, but anytime that's not one of the first words you read, or that's not there at all, or they say we compete secondarily on price or something like that. We compete, because some businesses will say we compete primarily on, and give you some things like that. Also things like immediate availability of the product, or on-time delivery or something. It's very interesting when you read those things, because those are strong hints that it's not all based on price, and there's some specific things about the industry that you need to know. Because most industries will not say things like on-time delivery. They will say price. The very common ones that you're going to get are price, quality, right?
Yeah, sure.
Selection.
Yeah.
Okay. And those usually don't mean much. There are some companies where it does, where like they say selection and they mean, Nebraska Furniture Mart competes on selection. They mean because you can see more examples of furniture there than anywhere else in the world, right? So sometimes it does matter, but usually you ignore price, quality, and selection, right?
Got it.
It's interesting if they mention things about technology being important. It's interesting if they mention things about regulatory things being important.
Because if it's regulatory based, then that could be a source of their competitive advantage. Right,
exactly. And that's one of the things with the risk section, is that some things in the risk section are actually interesting from the perspective of maybe telling you about a competitive advantage.
I think in the risk section, which was the next section we were going to go over, if you can't figure out like a business after you read the business and then the risk section, you should just put it in the two, like just put it, don't even go like into it. Like you should really be able to, like for me, for example, I feel like when I learn about a business and I go through the risk section, for me, it really helps kind of like figure out the company, believe it or not.
Yeah, I agree. I think both of those, that's true.
And a lot of it is written by a lawyer for other lawyers, and that is true, but I think the more you read, the more you just sort of pick up on.
Yeah. There are some companies where the company is easy to understand, but the 10K is not written to be easy to understand. So, like I said, I haven't read the Microsoft one recently, but companies like that sometimes have things that, unless you knew what Microsoft or Google or Apple were before you opened it up, what they say is not actually that clear about it. Like literally they may say things like, we help businesses be more productive, when you're really a software company that sells business software, you know? Or, Google might say, we organize the world's information or something like that. You're a search engine and you're a video website, you know? That kind of thing. So there'll be sometimes language that's difficult that way. That's easy. It's always easy to read a 10K if you've already had some experience with the company's product or something. Because then you understand what these words mean.
And that's what I usually do. I like to, and that's why I like to Google around to see okay, what do they actually do? And you get that all from being outside of the filings, right? And even to put that even more perspective, when you were talking about animal wild safaris, I went and I watched a bunch of YouTube videos on the actual safari, and people like vlogging it and going through the process, because I was like, okay, after doing that, now I can go back to the 10K, and I'm able to almost like picture in my brain, kind of pick up on things more, because I could visually see what they're doing, what they're talking about. Yeah.
And I should talk a little bit here about how I like take notes on the 10K. So you take notes separately from the 10K, right? Yeah. So I take notes directly on the 10K. And there's certain like notations that I do over and over again that are the most useful to me. So I'm mostly writing down calculations and things next to it. But the things that I do generally are like I underline certain things that I think are important. So the biggest one is underlining. I box any name that I could look up. So a person's name, name of a company, name of a location, anything like that, I box that way. I put stars around anything that I know will be a source of information. So like if they might say that they are that such and such data they're providing is because of a trade association. So now I know the industry's trade group that I can go to their website and find out. Or they say this market share data is based on U.S. government information. Now I know the Department of whatever is where I can find information about everyone's share and stuff.
Yeah.
And the other thing that I do is I put question marks on things that don't seem to that I don't understand what they're saying, or and then exclamation points about things that I think are warning signs. The other one that I do is I just write on things where I don't believe what they're saying.
Got it.
Which is very common. Like there's just certain things where they say something, I'm like, I don't really think that.
Like
that's
what? Like what's a example of that?
So we compete on the basis of, they'll say, right? And they may list a bunch of things. Sometimes what a very common one is like when they talk about their core competencies and stuff, people are our greatest asset, those sorts of things. There's going to be a lot of, because I think about something and I go, but do they really have better technology than what the other company is? Or a lot of times it's like, well, yes, you might be very proud of this, but does your customer actually care about this or any of those sorts of things? So sometimes there's some stuff, there's some language in there that they're telling you that I think doesn't matter from like a microeconomic perspective. I don't think it's really driving customer decision making and stuff like that.
Mm-hmm. Cool. So business, then we went over, I guess, risk factors. I mean, is there certain things that would stand out to you in the risk factor section?
So ones that are specific. So most companies are going to list a bunch of risk factors that just don't matter and aren't specific to the company.
Just because it's like kind of boilerplate with it. From like the industry and stuff like
that.
Right.
And some of them have been warned not to do this. The SEC, they're not supposed to do this, but they keep doing it. For the SEC stuff, you're supposed to include information which is actually risks that are actually like germane to your particular company. You're not supposed to put in these wide-ranging risks that they do. But for instance, after the financial crisis, every company started including risk of a financial crisis, even in cases where the company doesn't rely on much credit or something. It doesn't make much sense. They've started putting in things about risks of recessions and things like that for companies where it might matter a lot and companies where it didn't. I've seen risks of SARS listed after SARS happened. I've seen risks of global warming.
I've seen global warming.
I've seen, but to give you an idea, I saw global warming in a movie studio. What is the risk of global warming? Sure. I mean, SARS, you could say, okay, so if they have some contagious disease thing that they're worried about.
No, they throw like an acts of God in there and stuff like that.
Yeah,
sure.
But if it was, let's say instead of a movie studio, you were a movie theater operator or something, right? If they said, oh, there's a risk of SARS or something, that might matter a lot, especially like say you were a Hong Kong movie theater, right? That would matter a lot because people don't want to be in groups all together, so businesses that rely on stadiums and concerts and theaters and things, that's a real risk. But putting that in for all sorts of other companies, it shouldn't be in there, So you look at the ones that are particular to them, and those are often things like a risk is we rely on a small number of suppliers. We rely on a small number of customers.
I was going to say, I mean, a lot of their revenue comes from a select group of customers. And you'll find that more common in smaller companies, believe it or not. Is you'll see a lot more customer concentration. Which is something to, obviously think about.
And also things like that if they talk anything about their reliance on certain technologies, patents, things like that.
What about properties?
So properties is one of the most important sections, but for most companies, there's nothing interesting in it. So properties is going to be things that they own, anything that they own, but also they'll talk about things that they lease and stuff like that. Some companies will give lots of detail on it and some won't. Like NACCO gives huge amounts of detail. They break each mine down and everything. There's a whole section about all the mines. Some companies don't do that, and so you have to kind of learn more. Like they won't give you specific addresses and things, but very small companies often will. So you have specific addresses you can look up. You can value each of the properties that they own, and you can also see risks there too, because things that they lease would mean that they have a high amount of rent that they have to cover. So it's a very important section of the 10K.
And then legal proceedings.
So legal proceedings is good for a couple of things. One, you just want to read it just in case. Most of them are going to say that they are involved in some legal cases that arise from time to time in the normal course of their business. No, there's nothing unusual, But some of the other ones that they'll list will give you some hints more specifically about the business that they're in and what sort of things they face. So it can be stuff that's really specific to the business that you kind of assume. So like if you look at the 10K for like Domino's or a company like that, they're going to have something listing that, a driver of ours was paralyzed or caused other people to be paralyzed or something. It's a large, we could lose $3 million on this, whatever. So you get the idea they're probably being sued all the time over accidents having to do with their drivers. You get the idea, well, there's probably a big insurance risk with that and all sorts of other things like, so then you start thinking about that kind of thing. The most interesting ones are usually ones that give you hints of the history of the company. So legal proceedings are like, we're suing our former CEO, or our former CEO is suing us, former board members are suing us, activist investors are suing us, all sorts of those kinds of things that give you hints about what the company looked like before, what infighting there's been between them, any restructuring of it and stuff. Like a lot of those things will hang around for a long time. And this is also good to read past 10Ks just for certain sections like legal proceedings, because eventually they'll disappear. Once that's settled or whatever, it won't be in there. But a lot of times Googling the cases and the names and stuff of the people will give you
what happened
tons of information about it. A lot of times legal stuff is the only way that I know about something. I was talking to someone recently who was looking at something where there was receivables, and he didn't understand what the receivables were. They looked like there were about 2 months of receivables for a company that he thought shouldn't have any receivables. So I Googled quickly on it, and I found that they were being sued, or they had been sued.
What'd you Google?
The company's name, receivables, and that was about it, I think.
Yeah.
Or a receivable, like it was, they may have listed, anyway, but the company's name and receivables, there may have been some other stuff I Googled with it. And it wasn't on the first page of results, but it was like the next page or whatever. Yeah. And there had been a lawsuit from like a class action suit on behalf of investors claiming that the company hadn't disclosed information about a program that they had, a credit program. And so it went into great detail of what that credit program was and why they had all these receivables.
Got it.
But you can tell just from the financial statements, he was able, without knowing about that court case, to know this company shouldn't have receivables. And then by looking that up, you can find out that actually someone sued them over the fact that they hadn't described the program enough about why they were extending so much credit to their customers instead of previously they hadn't been at all, you know? So you can see that from just something that's unusual. If you thought the company was being paid in cash right away and you see 2 months worth of sales there,
it should stand out.
It stands out, and it stood out to him, and then with some Googling, you can find a court case on it. Yeah.
Got it. Notes to the financial statements?
This is the most important part of the 10K,
yeah.
Right? When you say this is where you spend the most time is reading these notes, yeah. So there's some
because I think it adds context, to the numbers, and
right?
Stuff
So
like
we
that.
talk about the financial statements. There are these financial statements. You're going to see income statement, balance sheet, cash flows, and you'll probably see either a statement of comprehensive income or a change in shareholders' equity, basically. After those statements, you're going to have notes to them, which are going to describe a bunch of different things. They refer to them as notes as if they're just footnotes to those financial statements, but really they are the financial statements. They're the stuff you have to read to be able to understand what's in the statements. Especially true if you're like when I'm reading about a company that reports using IFRS instead of GAAP or something like that. I may not be as familiar with how they account for receivables, inventory, any of those things. But the big ones are revenue recognition. Right. So that's always going to matter. So they're going to tell you when they recognize revenue,
how they book it.
Yeah. So they'll give a description, which will be like a common one would be revenue is recognized when title passes to the buyer, which often will be like at the company's, like the factory gate, basically.
Yeah.
At the moment that it's put on a truck or something leaving, title passes to the buyer, and at that moment is when they recognize the sale, right? So that kind of language is normal, you expect to see. But if you see other cases where it's like giving you indications that they may be collecting payments before recognizing revenue, that's really important because it means they might have float, right? And the reverse is true when it seems like they're saying something about revenue recognition that worries me. And usually those are very complicated situations. We talked about a little bit, I think, that I had seen some stuff in GE's financial statements that I didn't like.
Yeah.
And I don't know exactly what's in there, but basically I was reading a note to the financial statements, and there was a term that they used, I think twice in the entire 10K. And you can do like a search on your computer for it. And I don't normally do that because I don't need to do it normally. But when I read the entire 10K, I was like, they never talk about that again. This is not a term I see other companies using, and they don't describe what it means. So I searched, like, am I going crazy?
Yeah.
And searched, and it's only mentioned twice in the same context, and then never described what it means. And I assume...
Do you remember what they said?
It's never described. They don't say what it is. Now, maybe in the presentation...
Do you remember, like, what it was? Like,
yes. Yes, I remember exactly what it is. It's how they're accounting for what I think are long-term service contracts, which are probably on either their... If I remember right, it's either their jet engine stuff, or it could also be medical stuff, right? But what I was concerned with is the exact way they described it in some ways it showed up in the statements bothered me because I wasn't sure if it could be used as a way of smoothing earnings out and stuff.
Yeah.
In terms of, like... So we often look at companies... BWX Technologies or something, they might have something where once they install something, it's very likely they'll do all the maintenance work on it for a long time.
Yeah.
But we're not seeing something appear on the balance sheet that's saying like a customer contract for a term of 30 years or whatever. It's just saying that the it's just, you expect them to retain the business, right?
Yeah.
So the same thing, like if it was an elevator company or something, I would expect them to maintain the elevator, but I'm not seeing a contract on there that has to do with that. In this case, I was seeing some changes in things about which I think were long-term service contracts is what it had to do with. And I felt that that's okay. You can account for things that way, and companies do. I didn't feel that there was adequate description of what was an unusual term. So, like, if you say inventory receivables or whatever, you don't have to explain it. I understand what I think you mean by that.
Yeah.
If you say LIFO or FIFO, I understand what I think you mean by that. But when we get away from that, I need some more description. Like I talked about a movie studio. Movie studios do a different way of accounting for their like box office and stuff, which is very different. Basically, they write off the value of they put when they make a movie, they put the movie on their books at cost, and then they try to match it off against revenue as they collect revenue by guessing how much revenue they're eventually going to have within the first 15 years of the movie's lifespan, and then matching it off. So like they recognize a lot of revenue when it's in theaters, and then they start to recognize less and less revenue when it's in a home video and things like that. And they do it based on an internal projection of that to try to match it off, which is a principle of GAAP to match revenue and expenses. That's fine. But you need some description of that in the 10K. If you've never, if you don't have any description of that kind of thing that I just explained here, then I don't want to see a term that I don't recognize before. And like, it was an example of some stuff that I thought they weren't explaining something well enough that way. Now they may talk to analysts about it, they may do it in their investor presentations and whatever. All I did was read 2 10Ks.
Yeah.
But from that I went, and my guess when that happens is not necessarily good, bad, whatever. It's that if they did that, they don't want people to understand what it is.
Yeah. I mean, Buffett always says if he can't figure something out, he knows it's because the company doesn't want him to know.
Yeah,
essentially.
Have you ever seen the thing where they show like where he wrote on the Lehman one?
Yeah.
Where he put what pages it was? Yeah, that's like me. What pages I noticed things that were unusual or whatever that I would be concerned about. And, so it's important to understand what they're talking about, and anytime you see unusual terms, you need to know what that means.
Sure.
And so it can be things like if there was you'll find somewhere in the financial statements, they'll say, related party receivable or something. I want to then learn what the related party receivable is, and usually it's explained perfectly well.
Yeah.
But if you never find out what it means, then that's a problem.
Sure. What about summary of significant accounting policies?
Yeah, that's the most important section, basically. So that includes stuff like revenue recognition. It's also going to include description of other things that are important for that company. It'll be different depending on what kind of business it is, what's significant.
Sure.
Yeah.
What about debt?
Debt, it will have a description. It's very important. If the company has debt, that's where you get all your information about it. Also, leases or rent will also be there for companies that lease in its own section about leasing. And so it'll just give you a description of basically when the debt matures and things like that. Also, literally, it'll tell you what bank it's with and interest rates and what it fluctuates with and all that sort of stuff. But for me, the really important thing to know is the maturity dates, basically. Is this,
of that debt.
Yeah, what years does this mature in? And there may be a schedule there that says within 1 year, within 1 to 5 years, that sort of thing, or even by year when it matures. The maturity schedule is what I care the most about.
Depreciation?
Depreciation is just seeing how fast or slow they're depreciating things.
Yeah.
And that's mostly based on experience of knowing what companies in the industry depreciate.
I was going to say, do you ever look up to see what their competitors are doing?
Yes. Yeah. So the really interesting ones are when they depreciate really slower than I would expect, which they're trying to make their earnings look better. Or the better situation, which I found much more with little companies, is sometimes you see they're aggressively depreciating, and they're basically using the fastest way to depreciate everything they can, which understates their current earnings, and it also understates what's in their on their balance sheet, which may inflate their return on equity in future years. But it's basically making it look like they're earning less than they probably are right now, and you'll see that in the cash flow statement backing that up. But it also just indicates like they're not interested in reporting a lot of earnings. That's always interesting when you get some indication, like with the GE thing. What would concern me there is that kind of makes me feel like they're interested in managing exactly what they report in earnings. That was my initial thought there. If a company's aggressively depreciating, that makes me feel like management doesn't care what they report in EPS. Like they're not interested in reporting the highest EPS number they can. They might be interested in paying the least taxes they can, or they might even want shareholders not to see that they're making a lot of money. So that's very interesting. You want to look at a company that they're earning. They're not focused on reporting the highest possible earnings per share to you.
And then my favorite segment or section is segment and geography revenue.
Yes,
because this is where you can really break down like the business parts of the company.
Yep. And so
and value it, independently or however you want to value it.
Yeah. And you talked about it with parks, which is very useful. So Parks America breaks down the results of its Georgia park and the results of its Missouri park, and then also has corporate costs. And so from that, you can tell that the Missouri park isn't making any money, losing money some years, and the Georgia park is making a ton of money, is actually very successful. They also break down assets in that case. That's not always the case. Sometimes you'll get the most common one is just revenue breakdown, but in some cases they'll even break down assets and stuff, so you can do calculations of returns on capital and all that. And so in that case, you could tell that the Georgia park had really high returns on equity. You could look at it as if it was its own business.
I love when they break that down. And if they do, I always do look at it as if it's its own business.
Yeah, and we talked about that. We're like, well, what if private equity were to buy just this park or whatever? You could see how much value they would put on it versus like the whole company mixed together. And obviously, if one business is losing money and another's making money, or one business is really good and one isn't, that's hugely important. Geography also can work the same way. There's lots of companies that make a lot of money in like their home market or whatever and have had trouble in another place.
So we're going to go back to the beginning.
Okay.
And as if it's an annual report.
Yeah.
And what about the annual letter to shareholders?
Okay.
Because I always like to read those.
Yes, I like to read the letter to shareholders too. There's a lot of companies don't have them and don't have a lot of detail on them, but when you can find them, they're very useful, especially if you get any sort of voice from the CEO that sounds different than just your usual marketing thing. Because, of course, a lot of these are going to be written they hired an investor relations firm to do this, and the CEO put their name on the bottom of it, basically. The same way that, an ad that the company is putting on doesn't mean if you see the CEO in an ad, he probably didn't write his own copy that he's saying. He was probably just told to stand in front of the camera and say whatever the agency had agreed on with their marketing department. So same thing here. But sometimes you get specific and interesting things that they talk about. If you get any sense of the personality of the people, especially ones where you have like someone who was a founder or who is a major shareholder in the company or something like that, they may feel a little bit more like Warren Buffett does or like Jamie Dimon does, where they feel they can really put themselves out there and just talk as they would normally instead of feeling really bound by, having to have a very standard corporate presentation of it, right?
Yeah.
Like we were talking about Trinity Bank puts out quarterly letters to shareholders that are very short, right? But are interesting in how informative they are.
I was going to say, if you really want to learn how a bank works, and I guess especially from the management perspective, but he breaks it down. I think, which is good. So if you really want to learn about banking, go read all of his quarterly letters. Yeah,
and I think the letter to shareholders a lot helps with understanding how the business actually works, because unfortunately, the thing that the 10K is really bad at is explaining how the company actually makes money. Like a 10K doesn't just come right out and say to you, we don't make any money on our original equipment. We make all our money servicing the original equipment, and or something like that blunt. You can figure that out by looking at it yourself. But like a CEO will say that. They'll say our service revenue is so important, and we need to grow that the installed base, and this is how we make all our money. And they'll be very upfront about that. The one you were talking about with the banking one, they were very upfront about like how the yield curve works for them.
Yeah.
And it's much more useful than if you're reading a newspaper talking to you about the yield curve and stuff. Here's a bank CEO talking about how it really matters
Instead
to them.
Of, the yield curve has inverted, but he actually explained how it relates to them.
Yeah. And so I think the letter to shareholders always puts things in great context that way. The other thing is just how optimistic or pessimistic they are and how realistic they are about like whether they're, I like to, if there are letter to shareholders, I like to read every single one that I can get my hands on, especially to see if like in the past they were,
the more you can learn about a company that's away from its 10K, the more you'll kind of just get a good feel for everything.
Yeah, absolutely.
Because again, like, yes, the financial statements and like 10Ks, they're great to learn about, what has happened, but to actually like get like a real world like a version of it.
Yeah.
Go watch YouTube videos like we've talked about. Go look at satellite images of the business itself. Just go kind of get it from like the customer's point of view, and then I think it helps you figure out the business more.
Yeah, and I tell people when they worry about that they're not getting the 10K, then read a report that some other analyst wrote, read anything about the company, descriptions of it, whatever, and then go back to the 10K.
Yeah.
I like to just pick up the 10K without knowing anything and read it. But if you feel like you don't understand it, then get that other secondary source stuff and then go to the 10K, or the best way
But
probably.
I feel like you're able to do that though because you have a framework that you've read so many other 10Ks, so it's a lot easier for you to do that.
Yeah. And so for the average person doing this, I would say it's more work. You might want to read the 10K, then learn everything you can after that, and then go back to the 10K and see what you now know better, having learned about those things, having seen those videos, having looked at those satellite images, having, maybe talked to someone at the company or an analyst or a customer or someone, done some scuttlebutt, and then you return to the 10K and you'll realize that 10K could have told me a lot more than I knew at the time, but I didn't have like the background knowledge I needed.
Yeah. No, I think that's good. Well, I want to thank everybody so much for tuning in with Mr. Geoff and myself. If you are listening to us on the podcast app, be sure to hit that thumbs up button and leave us a rating review. That helps spread the word. Check out Geoff's weekly Gazette that goes out. You can sign up for that at focuscompoundinggazette.com. I want to thank everybody so much for tuning in, and we will see you in the next podcast.
Hey, this is Geoff Gannon, and that was the Focus Compounding Podcast, the podcast where Andrew and I talk general investing concepts. To learn about specific stocks I like, go to focuscompoundinggazette.com. That's focuscompoundinggazette.com, and enter your email. Once you enter your email, you'll start getting one free 2,000-word stock write-up a week. Andrew and I also manage accounts for clients. To learn more about our managed accounts, email Andrew at info@focuscompounding.com or text or call Andrew at 469-207-5844. Thanks for listening.